Right, hi everyone. Good morning. Good morning, good afternoon, good evening from wherever you're tuning in. Right, just apologies for a slight delay. But yeah, everything's all good. We are on streaming live on YouTube today. So this is a pre-market live analysis brought to you by IC Markets. Desmond's a little bit under the weather today, so I'll be taking over. My name is Ketan Ramachandra. So just give me a sec while we make sure everyone's tuned in, and then we can start as well. All right. I really appreciate everyone tuning in today. Hope all of you have had a great weekend. Any football fans, with the Premier League starting this weekend as well as the Bundesliga, right? Hope you've had a good time with your family and friends as well as catching up with some football. Right. I got a few people. All right, hi everyone. Okay, hi Springfall, hi Watson. All right, great. Just want to make sure you guys can hear me loud and clear and see my screen as well. And do take note, you can drop all your questions and requests in the chat box live chat box here as well. All right, hi Solomon. All right, okay, I think we're good to go. So let's start off. Let's kick things off. All right, hi Isiaka. All right, hi Jamilu. All right, great to see familiar faces as well. Great, great, awesome. Thanks for tuning in. All right, okay, okay. As usual, please take note that this is marketing and communication. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. The analysis contained herein does not constitute a personal recommendation and does not consider your personal investment objectives, investment strategies, financial situation, or needs as well. Also, do take note of the risk warning that comes with trading Forex and CFDs. They carry a high level of risk to your capital and you should only trade with money you can afford to lose. Trading Forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risks involved and seek independent advice if necessary. Alright, just a simple agenda for today. We'll start things off by looking at the key news events, touching briefly on what happened last week, and of course, what to look out for at the start of the new week. And we'll do the analysis on the majors, and of course, looking forward to for any custom requests that you may have. Right. So, as I mentioned earlier, please drop all your questions and requests in the live chat box found below the video. Okay, so once again, my name is Ketan Ramachandra. I'm an analyst here at Investment at Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for 2019, 2020, and 2021. All right. Okay. Yes, as I mentioned. All right. Hi, Joel. Yeah, just as I mentioned right at the start of the webinar, Des is just feeling a little bit under the weather, so I'm just taking over for him today, right? All right, hi Ren. All right, I see Desmond's online as well. Yeah, yeah, yeah. The man himself is here. All right, okay. All right, hi Ren. Yeah, we'll go through Pound for sure. It's one of the majors as well. All right, okay. Right. Okay. So just we'll quickly start off with looking at some of the key economic events that took place last week. All right. So we had China trade balance on the 8th and CPI data as well. Trade balance figures were in general pretty good, but one of the main points that we're looking out for was oil imports, right? China being um, China being one of the or rather is the world's largest importer of oil, and their oil imports have been dropping on a monthly basis as well. So this latest reading for the month of July showed that they imported, I think, about uh, the imports dropped to about 10 million barrels per day, which is like a 6 month low, just to get some context in how little they are starting to import oil, right? So it was a 6 month low. And then combine that with CPI data, which came out on the 9th, which showed devaluation, or at least this consumer segment entering devaluation. So because of that, we have lower demand for crude oil. So this was acted as a bit of a negative catalyst for crude oil prices. But if we look at the charts later, you can see crude oil and especially WTI did manage to register a seventh consecutive week of gains, right? Do take notes. There were 7 weeks of gains for crude oil. Okay, and then quickly on to UK GDP, right? UK GDP was this was the preliminary figures for the second quarter of 2023. So we had an estimate of 0.2% growth, but the actual reading came in at 0.4%, right? So this was actually a surprise or stronger than expected reading, which caused the pound to jump higher on the 11th of April. However, the main highlight has been the inflation data out of the US, CPI data on the 10th, as well as PPI data on the 11th. CPI, as we all know, is Consumer Price Index. PPI is Producer Price Index, which measures wholesale inflation. And both these figures actually came in higher than the previous month, right? So July's readings came in higher than June, and which starts to raise some fears that inflation might be making a resurgence in the US. Although unemployment claims came in stronger than the forecast, so if this figure is higher than the forecast, it means that there are more people applying for unemployment benefits, which would indicate that there may be some signs of cracks starting to appear in the employment market in the US. So that would be negative for the US dollar. But however, because headline CPI increased in July versus June, and also PPI as well increased in July versus June, these two data points actually act as a positive catalyst or bullish catalyst for the dollar index. So that is why we saw a pretty strong uh, finish to the dollar index as well. All right. Okay. Now, what to look out for this week? Okay, there's a couple of things going on. I guess the three main things to look out for this week would be the RBA policy meeting minutes, which will be released on 15th of August. Right. So we all know the RBA kept the cash rate on hold at 4.1% last week. This was the second consecutive meeting in a row where they kept rates on hold, but their statement was broadly hawkish. Okay, so the minutes that will be released today shouldn't be that much different from their statement, but we'll get a bit more details into what the board members think regards to inflation, employment growth, labor market. So this could provide a short-term boost for the Aussie dollar because the minutes are likely to reflect the hawkish statement that was released last week, but with more details, of course. Right, following that, we have the Reserve Bank of New Zealand making their cash rate announcement on the 16th of August. Current cash rate is at 5.5%. Now, it is quite likely that they are going to keep rates on hold again. So this would be the third time in a row, or rather the third meeting in a row, where the RBNZ will keep their rates on hold at 5.5%. Okay, part of the reason for this is because global growth is weakening and domestic inflation is declining as well. Right, with New Zealand relying uh, quite heavily on exports for most of its GDP growth. Right, we have like New Zealand being a big exporter of dairy products as well as animal products, right? Meat, dairy, right? So because global growth is weakening, there's less demand for these items. There's also, and because inflation is also declining quite steadily now in New Zealand, there's less reason for the RBNZ to raise rates. So it's quite likely they're going to keep rates on hold, and this could possibly add to the downward pressure on uh, the Kiwi dollar. All right. Then next up, we have also China releasing their industrial figures for 15th of August. Remember, we mentioned at the start uh, a little bit earlier where we talked about the trade balance figures, China oil imports, as well as inflation data, which showed uh, crude oil demand to be weakening. Right, so we have industrial production figures which will be released. So June's reading came in at 4.4% year-over-year growth. July's estimate shows a slight increase to 4.5%. Now, should the actual reading come in higher than the estimate, it is quite likely this would provide a potential positive boost for crude oil prices, and we could see them being bumped up on the 15th of August. Okay, and the last one of the last key events to look out for will be the minutes from by the Federal Reserve. So this would be the FOMC meeting that took place in July. So the minutes for this meeting will be released and will definitely offer more insights on the state of the economy and interest rate projections by Chairman Jerome Powell as well as his other FOMC committee members. Now this could act as a bullish catalyst for the US dollar. All right, now let's quickly head on to the charts. And let me see if there's any questions. All right, why did the... All right, Solomon, great question. Right, yes, yeah. So why did the dollar strengthen even though CPI was lower than the forecast? That's right. Okay, so initially, okay, let's go to the charts first. Right, so okay, here I am on the dollar index. Right, currently I'm on daily time frame, but let's quickly just zoom in onto the 1 hour time frame so I can quickly answer your question as well. Right. So CPI was released on, I believe, what is it? When was the 10th, right? Hang on, just let me quickly check. CPI, yeah, CPI was on the 10th and PPI was on the 11th. All right, okay. Just wanted to make sure the dates. So 10th, it was at 12:30 p.m. GMT, right? Okay. Right, okay, here we go. So this candle. Okay, so let's just switch into the 30-minute time frame. So okay, so here, here I am, right? Okay, this is 10th August, 12:30 p.m. So that's when the CPI data was released. Okay, so as you mentioned, right, Solomon, the CPI forecast was the CPI actual reading was lower than the forecast. This was we're talking about headline CPI, but it actually increased. So what we're talking about is now you can just if you go to Google and we type BLS CPI. Right, we can go to the Bureau of Labor Statistics. This is the homepage for various economic data out of the US, such as CPI, PPI, as well as unemployment data as well. So if we click on charts, right, and we go to the drop-down menu, we select 12-month percentage change, consumer price index, selected categories past 20 years. Click on go. Okay, so this is showing us the chart for headline CPI, and if you want to look at core CPI, we click on all items, less food and energy. All right, so but we're just going to focus on the headline CPI because this is what was key to the movement of the US dollar on the 10th of August. Okay, so June's reading was 3%. Um, July's reading came in at 3.2% and the estimate was 3.3%. So yes, July's reading did come in lower than the estimate, coming in at 3.2% versus the estimate of 3.3%. This should have been negative for the US dollar, but it did play out. I mean, it did. The US dollar did drop, and DXY did drop, but it was very briefly because after that traders and the algos probably realized that because although July's reading was lower than the estimate, it actually ticked higher, right? It actually increased versus June. So now this has started to raise a little bit of concern that inflation could be creeping back in. And because the same thing happened with PPI, so if you type PLS PPI right into Google, it'll take you to Producer Price Home Index. Videos glitching. Okay, hang on. Let me check stream settings. Okay. Is it better now? Because on my end, when I look at the analytics and the stream health is excellent. I don't really see any issues. Uh, is it getting better now, David? Right. Okay. So similarly, if you look at PPI data, Fabio here is okay. All right. Thank you. All right, David. Maybe it just could be your connection. All right. Maybe just refreshing the page might help. Okay. So here we are on the PPI data website. So same thing. We're going to click look for PPI final demand, 12-month change, non-seasonally adjusted, click on go. So if you look at headline CPI, so after declining pretty steadily for the past 8 to 10 months, July's reading came in at 0.8% versus June's 0.2%. So we had an uptick in PPI as well, combined with the uptick in CPI. So this is starting to raise fears that perhaps inflation could make a resurgence in the US, and that is why the US dollar actually picked up. So if we look at the charts, so we go back again to the dollar index on the 10th of August, 12:30 p.m. So that's when the CPI data was released. So initially, dollar index did drop, right? Okay, it opened at about 102.11, went as high as 102.25, roughly 23, dropped as low as 101.79 or 101.80, and then it proceeded to reverse and go higher. So the initial reaction was for dollar index to fall because the July's reading was lower than the estimate, but because it came in higher than the previous month's reading, we saw the dollar index gain strength. All right, thanks Jamilu. Thanks for replying as well. All right, great. Okay, so this is what happened. And also, as we mentioned on Thursday, we had unemployment claims which came in stronger than the forecast. So this should have been acting as a negative catalyst for the dollar index. But because CPI actually increased in July versus June, so that data point I would say, took precedence over the unemployment claims, and we saw demand for the US dollar come in, which would mean dollar index started to rise. Right. So similarly for the 11th of August at 12 p.m. and then 12:30 p.m. 11th of August was when PPI data was released. So similarly, we saw PPI increase as well, much more significantly versus CPI, right? From going from 0.2% in June up to 0.8%. So similarly to that, because of that data point, um, the demand for the US dollar picked up again on Friday, 11th August, 12:30 p.m., pushing up dollar index, and that is why if we look at go back to the daily chart, we can see that starting on 10th August onwards, right? Or rather, yeah, 10th August, dollar index did pull back initially because of the low CPI data coming in lower than estimate, but because all the data was higher than the previous months, we had a strong finish to the dollar index. All right. Okay. Now, perfect way to start off our analysis today by, of course, starting with the dollar index. So, as I mentioned, here we are on the daily time frame. Okay, right. Okay, so as we get, all right. Okay, so as we can see, right. So we've had. If we, let's go just quickly look at the weekly chart to get some perspective on how the dollar has been trading over the last few weeks. So as you can see, dollar hit a low of what is it, 10.9950, right? Like about 99.50 back in the middle of July, and after that we've had four relatively strong weeks of gains for the dollar index. Now this is a combination of the higher CPI data that we saw, as well as earlier in July as well we had weaker unemployment claims. So when unemployment claims are weaker than the forecast, that signals that the labor market is strong, and demand for the US dollar would pick up or will be bullish for the US dollar, so hence we have dollar index rising. So combination of technical factors as well. We had dollar dropping quite strongly in early end of June, early July, and then hitting a big technical level as well. 100 being a big figure, so we had a big technical level as well, combined with fundamental data, which has supported the dollar index in middle of July, and now we've seen a pretty big run up with 4 consecutive weeks of gains. Right, just to get some perspective on um, how dollar has traded over the last few weeks. Okay, so we can see dollar has been strong after hitting a low of 99.50, and we have 4 weeks of strong gains, and it's quite likely that this gain could continue this week, right? So the bullish momentum is potentially there, given we have the CPI data and PPI data turning higher, giving some bullish potential, acting as potential bullish catalyst for this week as well. All right, so that's it. Let's quickly do some analysis and try and see where are the resistance levels, support levels, and let's see if we can try and find any trend lines as well. All right, descending trend lines, ascending trend lines. Okay, right. Okay, so we're going to start off by identifying the support. Okay, so what we see here, if we look at 102.13, we can see a relatively strong overlap as well, support overlap. Right, so this starts in on, I would say, 17th of April. Right, if you go 17th of April, I will label this as my first support. So first support at 102.95, right? So if you look here, you can see price has uh, uh, reacted off this level as a resistance back in April, and after breaking out in May, it found support in the middle of June, right? So 102.10 roughly finding support here, and then of course price broke through, and as recently as last week, once price broke above 102.09, we see it finding support, and of course briefly going under on 10th of August, and then finally going high. So this is how we have identified the first support, right? So we see a nice overlap, at this level that starts on Monday 17th of April. Yes, 17th of April. So there's a nice overlap here. So this is how we've identified the first support. Right, what about first resistance? Okay, so if we just zoom out a little bit, in terms of first resistance, I can see a nice probably overlap around 103.56, yeah, 103.58. And if I go back all the way to this pullback here, we can see that yes, 103. So this level here at about 103.58 is a very strong overlap, because you can see price finding support here back in the middle of June of 2022, and then after making its highs last year to the third quarter of 2022, price retreated and it found support here in the middle of December and as well as early Jan before finally breaking through. And of course, after that, it found resistance here in middle of Feb, finding support here on 16th of March, broke through higher, broke under again, and finally running into resistance here on 3rd of July and 7th of July as well. So you can see multiple instances where the dollar index has reacted off this level, be it as a support or resistance. Okay, so this is how we've identified the first resistance, and for the second resistance, we can see that this swing high here on the 8th of March is a pretty significant level as well. You can see a pretty um, we see a pretty strong significant swing, right? So you can see here, this is a pretty strong significant swing, right? Although there's no real other overlap, but if you just look at it in terms of the swing action move, the magnitude of the swing, this is a pretty uh, big move. So that is how we have identified the second resistance, by looking at this significant swing. All right, okay. I also see a trend line as well. So if you go, let me just zoom in a little bit. So of course, starting with this peak here back in 28th September. You can draw a trend line down here. So you can see touching the second point over here as well, touching the second point here. So we're drawing the trend line down. Right. Now this is a descending trend line, which where price has broken out of it last week, right, on Friday, 11th August. And you can see price breaking out of this level last week. So this descending trend line is now going to be like a probably act as some sort of support as well. And also we had another trend line on a slightly shorter, closer time frame. So if you look at this peak that started on 31st of May and then touching on this high here on 6th of July, we can see another descending trend line where price has broken through last week as well. So we've had dollar index breaking through or breaking above two descending trend lines, which are now going to act as a potential support uh, area for this for this instrument. All right, okay, and then okay, I guess for the second support, um, there's no other major levels, right? There's no other major levels. But you could use this level here, which is at 100.82 as the second support, because we do see another significant swing here as well. We see a significant swing here that took place on 1st of Feb, right? Yeah, 2nd of Feb, a big significant swing here. And then after that, we see price finding support here again on 13th of April. And of course, price broke through, 13th July, but it did find support again briefly on 27th July after reversing higher. So you can see three instances, especially with two big significant swings where price has bounced off this level. So I think 100.82 is a good level to identify as our second support. All right, okay. See if there's any questions. All right, hi Rand. Okay, it says video is still bad, but okay. Interesting. On my end, it says here the stream health is still healthy and the status is excellent. All right, okay. Hopefully, maybe if you refresh the page, it could get better for you. For those who may be experiencing some sort of issues with the video quality. Okay, so this is dollar index. Okay, just to repeat, we're on the daily time frame. Okay, and this is how we see, and we expect a bullish move or bullish continuation for the dollar index here, right? So it's quite likely, as with when markets open later today, we could see the dollar index push higher. Of course, it may pull back again, right? No instrument trades in a straight line. So as markets open in the next 30 minutes or so, uh, we could see dollar index pull back. So if it does happen, it's likely to find support at about 102.10, and it's quite likely we could see the bullish continuation for dollar index continue, right? So if dollar has been bullish over the last 4 weeks, then naturally the euro has been falling, right? So as you can see, the euro dollar peaked at about 1.1272 back in 18th of July, and then it's proceeded to fall, of course, as dollar index gained in strength. Okay, so where is support and resistance levels for this pair? Right, I think first off, I think many of you would be able to identify this ascending trend line as well. Right, I think if you take a zoom out and you can see, right, starting from this swing low here on 28th September, we have a very strong ascending trend line as well. So we can see price is testing this trend line today, or rather last week. And with the US dollar being strong, it's quite likely this trend line is going to be tested and broken this week. Okay, so what about first support? we've identified the ascending trend line. What about the first support? Where the nice overlaps? All right, so if we look and we go back to 7th of March, right, we can see a pretty decent overlap level here, and about slightly, I would say, right, I'm trying to capture, yeah, this overlap here. What I'm trying to capture is this overlap here on 18th of April as well as 31st of May, right? So we can see that by looking at this level here, roughly at about 1.0785, right? Okay, it doesn't touch this swing low, but you can see that this overlap here did act as support to the significant swing here. We can see a nice significant swing here with a strong bounce. And you can see a pretty significant swing here as well as here, right? So this level at 1.0784 is how we've identified the first support. You can see multiple significant swings in the past, and you can see price potentially breaking through this ascending trend line and attempting to come towards the first resistance this week. Right, okay, so let's label this overlap here as our first support. Now, what about first resistance? All right, first resistance is going to be, we can see this swing high here that took place on 1st of February. We also had another swing high in 23rd of June. So you can see two instances where price has reacted off this level. Although we can see that price did break through here on 26th of April, but it found pretty decent support. So this level at 1.0995 would be our first resistance, and price is currently trading under it as well, right? So we expect a bearish reaction for the euro dollar, potentially breaking through the ascending trend line, heading towards the first support. Okay, now in terms of second support resistance, we could simply, there's no other really strong overlap, so you could just simply put it as the recent swing high. Select the recent swing high as the second resistance, and for the first support, we can use this swing low that took place here on 2nd of June, right? So we can take the wick of the candle here as the second support, or to rather to identify the second support which also coincides with the ascending trend line, right? So we have this zone here for support for the euro. All right, so it's quite likely we're going to see the euro continue to fall as demand for the US dollar remains strong, could remain strong this week as well. All right, okay. Oh, okay, Ren, thanks for the feedback. All right, Paul, you too. Okay, so it's perfect on your laptop but bad on the iPhone. Okay, I'm not sure why that would be the case, but okay, okay, it's great to know. It's probably a platform issue, right? I'm not sure why on the mobile devices you may not get a good quality. All right, thanks for the feedback, Ren. Really appreciate that. And Paul, you too as well. Thank you. All right, okay, right, okay. Now moving on to uh, pound dollar or the cable, right? So of course the pound and the euro do trade pretty similar to each other. So in a sense, the correlation between the pound and the euro is strong. So you can see the general shape or price action is pretty similar as well. So as expected, pound is falling as well. We can also see a strong uh, trend line here, ascending trend line, which was broken. Oh, hang on, let me get this here, which was broken last week, right? So this trend line was broken last week. This ascending trend line, rather, sorry, was broken, or rather, the first week of April, August, and then as price retraced higher, it ran into resistance, this trend line again, and then started to fall. So now this ascending trend line, which was acting as a support, would now be acting as resistance. Right, okay, so since I've got this green line here, let's try and identify the first support first. Right, so we can see price is, okay, we see a pretty decent overlap at 1.2649 or 1.2650, roughly around there. we can see a significant swing here on 30th of May, another swing here on 5th of May, and again acting as support on 29th of June, and currently price is just trading above it, right? So it's quite likely that the pound is going to test this first support and potentially break lower this week, especially in the earlier part of the week. If dollar comes out, demand for the dollar comes out very strongly, we are quite likely to see the first support being broken here, right? So we see a nice overlap at 1.26.49, and with regard to the second support, we can also see a nice overlap here. Let me see if I go back as far. You could even consider this pullback here, right? On 28th of April, we see oh, but it's not a real significant swing, right? We do see price falling quite strongly, but there was not a real significant swing. So I'm going to just use this at 1.24 of 37 as the second support, right? Because we can see a pretty significant, two significant swings, right? What we're looking for is significant swings, right? You can see here one, two, right? Two significant swings. This, if I were to drag it all the way here, we do see a big move down, but there was not much of a significant swing. So even though if I did extend this thing, we don't really see a significant move here as compared to these 2 points. So I'm just going to start um, the starting point from 15 December. Right, let's tidy up the charts a bit. Okay, now what about first resistance? Okay, so I think first resistance, if we zoom out a little bit, I think would simply just be the swing high that took place in 13th of July, right? So first resistance for the pound or cable would be the swing high that took place in July, and we have previously the ascending trend line, which is now acting as resistance as well, right? So naturally, we're looking for downside confirmation, right? So basically, if the first support gets broken, then it's quite likely that it'll trigger a move towards where the second support is, right? So do take note, we're looking for downside confirmation for the pound dollar, which is at 1.2650. So if price breaks through this level and stays below it, it's likely to fall towards the second support. All right. Okay, let me see. Any questions? All right, yeah, sure, Freeman. We'll definitely come to goal as well, for sure. We're definitely going to cover goal as well today, right? As we move down, the pairs will come down to goal as well. All right, okay. Um, then we can. All right, let's just move on to goal now. And yeah, and anyone else? If there's any other I guess okay. We've covered dollar index, euro, pound. We can move on to gold, and please drop any other questions that you may have or requests that you may have in the live chat box. All right. All right. Now let's switch over to gold. All right. So we all know gold and the US dollar has a negative correlation. What do we mean by that? So that means if the demand of gold price is going higher, that would mean the US dollar or dollar index is falling. And conversely, if gold prices are falling, that would mean dollar index is going higher. So as we established at the start of the analysis session that the US dollar has been strong for the last 4 weeks. Dollar index has been climbing after bottoming out at 99.50. Naturally, we expect gold prices to fall, and that is what we roughly see, clearly see as well. Okay, so what about gold now? Okay, so where are the support and resistance level for gold? So we can see a pretty strong support level at about 1000. Okay, price is currently trading around 1920. All right, we can see a relatively strong significant swing here that took place on 29th of June. Right, so I think there's no other major overlaps. Right, the first identification for a support or resistance would be to look for potential or significant overlaps, but we don't see them, so we're going to look for a significant swing. So this level here at 18,093 is a pretty significant swing, so we're going to use that swing low as our first support, right? And we can also do a Fibonacci retracement as well. And I think I also see a Fibonacci projection. Okay, so let's start off with the retracement. All right, so I'm going to start this retracement from the swing low here on 28th of Feb and end of course with the swing high here on 4th of May. Right, so if we just pull up all the fibs first and see where the levels are, right, so you can see price has already reacted off the 61.8% back in June, end of June, and now it's coming back towards it again. Uh, and then we also have 78.6% here, which acts as a pretty decent level to help us identify the second support because we also see a pretty decent swing here. It's not a very significant swing, but at least we have a combination of the 78.6% Fibonacci retracement and a relatively small swing here to help us identify the second support. Right, so I'm going to use the second support here at this small swing high at 1855, uh, together with the 78.6% Fibonacci retracement. Okay, so we can see that in the past price has bounced off 61.8% as well, and now it's going to with dollar index going to be strong as we expect dollar index to be strong starting this week, we can expect gold prices to push towards the first support. So I'm just going to tidy up the chart and just keep 78.6%. As we know, price has already bounced off 61.8%, acting as support in the past. So now it's quite likely, well, let's just keep 61 as well because we saw price didn't really break through 61.8% last week, right? We did see it bounce off. So this level could again offer a little bit of support, not a major significant support. Do take note the first major support for gold should be coming in 18,093, and I guess you could say the 61.8% could be some sort of intermediate support level where if it does get broken again, it's very likely price is going to hit down towards the first support. So let's just keep 61 and 78.6. Right, okay. Just to give an idea how price has reacted off in the past and is approaching this level again. Okay, now for about resistance. Okay, um, right. Okay, do we see any other nice overlaps here? Right, actually, okay, if we go back, we see a pretty strong bounce here. Right, we see a swing bounce here that took place on 21st of March, as well as price finding support here on end of May and early June as well. So this level at 1940 would be a pretty okay, you could decent level for the first resistance, right? Or we could see here, okay, probably all right. I think between so you can see probably I would say so between 1930, right? I think we could use just something like, let's see, I'm just trying to see a nice overlap, trying to find a really nice overlap. All right, okay, so right, so 1935. You can see price bouncing off here, finding support here in June as well, finding a little bit of resistance, support here in August, although we don't see a very big swing, but it did offer a little bit of support. So I think we see a nice overlap here at 1935, which we can use as our first resistance. What about second resistance? Second resistance, I think we can use this swing high that also overlaps here with this level here, as well as with price pulling back in 14th of April as well. So this level here at about 1981. Yeah, so this level here is a pretty decent overlap which we can use to identify our second resistance. Alright, I did mention a Fibonacci retracement earlier for this. Now where is it? Okay, so Fibonacci retracement basically involves 3 points. So we're going to start with the swing high here on 4th of May, going down to the swing low here on 29th of June and ending with the swing high back here on 20th of July. Okay, right, we're going to pull up all the Fibonacci levels. So for projection, do take note. We're going to be looking for 61%, 78%, and of course 100%. So these are the three key projection levels that we're looking out for. So as we can see, the 78.6 Fibonacci projection level aligns pretty well with the 78.6 Fibonacci retracement level. So giving us a confluence or Fibonacci confluence. So what do we mean by Fibonacci confluence? Okay, first of all, let's tidy up the chart and just keep 78.6%. Right, okay, so what do we mean by Fibonacci confluence? That simply means we have two or more Fibonacci levels that align at the same point. Now this could be two retracement levels, or in this example it could be one retracement and one projection level. It could also be an expansion level with a retracement, and so on and so forth, right? As long as it's more than one Fibonacci level that aligns around the same level or the same price, that means we have a confluence of we have a Fibonacci confluence, which means there's more than one Fibonacci level that acts as a supporting factor, giving uh, more significance to the identification of the second support. Right, so if we are expecting dollar index to rise this week, at the start of this week, we can also expect dollar index, of course, dollar index will be rising. We can expect gold prices to fall towards uh, the first support at 18,093. But do take note, price is currently closed last week at about 19,010. So it has to break through like a big figure as well as 1,900. So I think price could fall towards 1,900. And if it breaks that level, then it's quite likely it's going to test 18,093 as well. All right, US 30. All right, Solomon, yes. Okay, right. I think we're done with gold for now. We've got time. We'll do dollar yen as well as US 30, right? US 30 would be the Dow Jones. All right, so let's quickly move on to dollar yen. All right, okay. So here I am on the dollar yen. All right, okay. So for this, we've the analysis is already done, but I'll just run you guys through it. Okay, so first of all, okay, because dollar index is expected to be strong, we can see dollar yen, which closed at about 144.95 or just under 145 last week. Of course, as dollar index was rising over the last 4 weeks, dollar yen is also likely to rise, although it's not as uh, cleanly as the dollar index. You can see dollar index rising in a relatively linear fashion, right? There's less pullbacks along the way, but dollar yen had more significant pullbacks along the way, especially with the one that took place on 27th of July. But okay, so this upside confirmations, and just to run you through it, this would be our first resistance, this would be the second resistance, right? And then first support. Okay, so just to understand, just to run through with you guys, the first resistance is identified by the strong overlap level at 144.99 or basically 145. You can see price running into resistance here back in September of 2022. And then after that, of course, price broke through in the last quarter of last year. And then price found significant resistance back on 30th of June. We can see a very strong, significant, right, swing as well, a very significant swing from here. Right, so we see a very significant swing here. And then the price is testing this last week. So what we're trying to say here when we label this first resistance now as upside confirmation is that should price break through this level at 145 and manages to stay above it or stay around it, there's potential for it to break higher. So we're looking for confirmation for price to break above 144.95, stay above it, and then make a move towards what now would be the first resistance. Okay, this is how we uh, came to the conclusion for the upside confirmation for dollar yen. And we also see the first resistance is identified by a couple of technical indicators. First is the Fibonacci retrace projection. As I mentioned, projection is 3 points. So we started with the swing low here on 18th of Jan. going up to the swing high here on 3rd of July and ending with the swing low on 31st July. So we have the 61.8% Fibonacci retracement projection at 148.22, which also aligns with this retracement as well. So we've done this retracement here starting on 28th of Jan, going up to 14th of March and ending here on 25th of July. So again, we have a confluence of Fibonacci levels. We have two projection levels in this case. We have the 100% Fibonacci projection level as well as the 61.8% Fibonacci projection level. And we also have an Elliott wave count. Right, so we've done some Elliott wave analysis on the dollar yen. Right, so the first wave started here. So wave 1 started from 18th of Jan going up to 1st of March. Wave 2 ends down here 28th of March. Wave 3 ended here on 28th of June. And we had wave 4 ending on 18th July. Now for wave 5 completion, we've used the Fibonacci Elliott wave tool. So we can see the fifth wave projected to end at 148.06, which also happens to align, which also nicely, I would say, coincides with the two Fibonacci projection levels as well. So this is how we've identified the first resistance level. Right, okay, now with regards to the first support, we can see a very strong overlap at 142, right? Price finding support here in September, mid-September and September, and then after price broke through and made a pretty decent swing here as well. And you can see a pretty decent swing here as well. Price running into resistance, and then another pretty decent swing here as well. Price running into resistance, and then finding support here. Right, so we can see multiple instances where the first support at 142 has acted as a significant overlap, and that is how we have identified the first support level for dollar yen. All right, okay, and yeah, so of course we're looking for upside confirmation for the dollar yen, and if the demand for US dollars stays strong this week again as well, we are likely to see dollar yen push higher as well. Once again, do take note and look out for the upside confirmation before we can be more certain or have a higher probability that the dollar yen is going to stay above 145 and push towards 146 and eventually up towards the first resistance. All right, okay, let me check. I think the last question was US 30 Solomon. Okay, just before I'll end off with US 30. I'll just stick to currencies, just stick to dollar index. Yeah, so just quickly we'll do Aussie or the Aussie as well. Right, yes, so okay, let's quickly do the analysis for Aussie as well. Okay, so we can see price trading just below 65 last week. Right, so we saw price trading just below 65 last week. So we can see a strong overlap here at about, yeah, we see a nice overlap that starts here at 64.96. So this is the first support. But because dollar is strong, right? Because dollar is strong, we are expecting the Aussie dollar to fall first, and I also see a nice overlap here. If we actually, even if I go back here, we see a pretty decent swing here as well. Right. Okay. So the first resistance would be identified as 65.84, right? First support at 64.96. You can see a pretty decent swing here, a big swing here, another decent swing here as well, and then of course over here. So price has reacted off this level as support multiple times in the past and also ran into a little bit of resistance here. So this is how we selected first resistance. First support is this nice overlap here, and because we expect dollar index to be strong, what we're looking for is now downside confirmation. Again, we're looking for downside confirmation for price to break through 64.96 and potentially make and potentially move lower should this downside support level be broken. So should the first support level be broken, we're looking for downside confirmation, and that would trigger a move lower, right? Now, because there's no other levels here, um, we can try and see where the next overlap, I guess in terms of next overlap, would probably be around here when this pullback occurred. It's not the cleanest area, but probably the next support would be down here at 62.93, right? Around about 63. So roughly around there, we see a significant swing here. So there's no other major overlap. I guess you could argue that this level here at 63.95 is a pretty decent overlap as well. You could probably be some sort of act as some sort of intermediate support as well, because we see first support now. Should price break through this downside confirmation, the first support is pretty far, but I do see a pretty decent uh, overlap here. Again, it's not the best, it's not the cleanest. We do see some swings here as well, but not very significant. So potentially we could see uh, Aussie dollar at least come and test towards 63.99, or at least test 64 should the downside confirmation be broken. Although the RBA minutes meeting could be hawkish, which would provide rather a short-term bounce for Aussie dollar. And we're not expecting a big reversal in the Aussie dollar because of the RBA announcement, but rather a short-term bounce. But because we expect the dollar index to be gaining, so that's likely going to take precedence over the RBA minutes announcement, right? Okay, I hope that's answered your question. Is it Solomon, right? Okay, yeah. All right, okay, and we'll end off with US 30. All right, Watson, yeah, we'll end off with US 30. All right, US 30. So on my chart, it is Dow Jones, DJ 30. So this is tracking the 30 big industrial companies in the US. All right, so let's just move this here. So, right, okay, so what we're expecting. All right, okay, first of all, we see this is okay, I'm on the daily time frame for Dow Jones, right? So I see a pretty strong trend line as well. We see a strong ascending trend line. Price has bounced off this level several times now. We also see, all right, if we zoom out a little bit, we can see the Dow Jones or US 30 made its all-time high back in 3rd of Jan 2022, and going as high as what is this, 37, almost touching 37,000. And price just end of July touched 35,750 and before pulling back. So Dow Jones at its, I guess, 52-week high came wasn't that far off from its all-time high as well, but now we see price running into a bit of resistance. So we've identified the first resistance for Dow Jones or US 30 at about 35,400. We see a significant swing here, right? See a significant, oops, hang on. Yes. We see a pretty significant swing here, like a double top here that took place in 30th of March, right, last year. So we see like a sort of a double top. So we see this is a pretty significant resistance level where price broke through at the end of July this year, last month, right? But then it didn't manage to bounce off this level to move higher. It's actually sort of, I would say, yeah, it's a bit messy, right? We zoom in, it's just consolidating around this level. Yeah, it's pretty much, you can argue that US 30 has been ranging between 35,000 and 35,600 roughly, right? So it's been ranging around this level. So we can see that, right, although it closed in the green on Friday, we, let's see how equity markets open up this week, just to see where US 500 is. It's also about the same. Equity markets have been pulling back in general over the last few days. It's more obvious in the US 500 or the S&P 500 here, right? We can see for the past week, it's been pulling back. Nasdaq as well. Over the past 1 week, it's been pulling back as well. Dow Jones has actually, or US 30 has held up much better, right? So we could see Dow Jones potentially test this first resistance again and then reverse to potentially drop lower, right? As the rest of the equity markets are not very strong, we may see US 30 find some resistance at 35,400 and potentially bounce off this level and probably at least try and make fall towards the first support. Right? We could say that it might be ranging between the first resistance and first support next week, right? And the first support is also a zone that aligns pretty well with the ascending trend line. And if we look at the wicks here that took place on 13th of 14th of Feb, as well as on 16th of June, and we do see a support zone as well. So this overlap here at 34,400, you can see significant swings once more. You can see a significant swing here that took place on 18th of August. Another significant swing here on like 5th December. Another one here as well on 21st, 14th December. And you can see multiple instances where price has run into resistance, right? For US 30, right? Multiple instances where price ran into resistance, and now that price is trading above it, naturally this what was previously a resistance level would now be a support level. All right. Okay, so this is what we have for US 30. Okay, since we're going to end up with US 30, let me see if there's any retracements that we can use. Okay, so I think we can probably do a Fibonacci retracement from the swing low at 10th of July, going up to the swing high on 27th of July. Let's pull up all the fibs. Right, okay, so we can see, okay, right, 38. Right, okay, so we can see 61% lines up pretty well with where the first support is. And we can also see price in August, early August, staying above the 38.2%. So I'm just going to leave 38 and 61%. Right, okay. Um, because we have the 31.8% level here, we did see price when it stay above 35,000, right? So I think I'll just like to highlight this level as an intermediate support. Do take note, this is not a very strong support level, but it's just to keep giving us an idea that there is some decent support at 35,000, which also lines up just slightly above the 38.2% Fibonacci retracement level as well. So there may be some sort of support level here for US 30 or DJ 30 should price uh, react negatively off this first resistance or react bearishly off the first resistance and start to drop lower. It may find support here because as we saw since what is this since 4th of August, right, price has managed to stay above this level, right? So we do see I would say an intermediate support level. Is not a very strong overlap. There's no overlap, rather I would say there's no overlap at all, but just a support level that aligns slightly above the 38.2%, lines above the 38.2% Fibonacci retracement, and we do see the price managing to stay above it, right? So okay, so we do see a intermediate support zone which could offer some sort of support should price react bearishly off the first resistance. All right, okay, all right. We've come towards the end of today's webinar. Right, I would like to thank all of you for tuning in. It's always great to see uh, new names as well as uh, regular names as well. Right, great to see all of you tuning in, especially those who are in the Asia Pacific region. This is not the earliest, best, easiest time to wake up and uh, tune in for a webinar or do analysis on charts as well. And thank you for everyone else for tuning in from all the various time zones as well. All right, okay, just before we end, right? So as we saw, we've had, just to go back on the weekly chart for the dollar index, right? We've had 4 strong weeks of gains for the dollar index, right? 4 strong weeks of gains, and we expect this to continue, partly due to the stronger CPI data and PPI data that came out last week. And we have the the Federal Reserve releasing the FOMC, the minutes of the FOMC meeting from July as well on the 16th of August. That could act as as another potential bullish catalyst for the dollar index, right? So do take note. We expect to see dollar index strength in the dollar index, uh, and we could see it push higher. But of course, do take note of the first support and where the previous descending trend lines are. Price could pull back for the dollar index. If it does pull back, it may find support around this zone here, around 102.50, right? And then, and of course, the first major support is at 102.10. And then, if price does pull back towards this level, it's quite likely to find support here before moving higher, right? So just quickly go back to the slides. Oh, hang on. Where is it? All right, so just quickly go back to the slides. All right, so do take note, RBA policy meeting minutes released on 15 August. It may act as a short-term boost for the Aussie dollar, but do take note because we expect demand for the US dollar to be stronger, so this is likely to override uh, uh, the strength of the dollar, sorry, would likely provide the clearer direction for Aussie dollar. So that would mean Aussie dollar is likely to head lower. But because we have this data, this meeting minutes being released on 15 August, we may see a short-term bounce in the Aussie dollar because of these minutes, right? And then we have RBNZ, Reserve Bank of New Zealand, making their announcement, cash rate announcement on 16 August, where they're likely to keep the cash rate on hold at 5.5%. And if they do that, and with the expectation that we have for US dollar to be strong this week, we are likely to see Kiwi dollar fall. And then we have China industrial production figures as well. So if production figures come in higher than the estimate of 4.5%, this could provide a bullish catalyst for crude oil. Do take note, crude oil has risen strongly over the last 7 weeks, but of course the previous week having a very small gain compared to the other 6 weeks. But we've had 7 consecutive weeks of gains for crude oil. We may see some pullback, but if this data point does surprise to the upside, we could see crude prices remain elevated. And of course, we have Federal Reserve releasing their FOMC minutes from July's meeting on 16th of August. All right, just before we end off, let's go through the disclaimer again. We have the ending disclaimer now as well. So do take note of the risk warning that comes with trading Forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Trading Forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risks involved and seek independent advice if necessary. All right, so we'll just jump back to the dollar index chart and we'll end off with this. Right, thank you once again everyone for tuning in. It's been a great pleasure for me to run through the analysis with you this morning or this afternoon or this evening from wherever you're tuning in. All right, and do look out for the upcoming IC Markets webinars this week as well. They'll be conducted by myself as well as my colleagues as well. It'll be a mix of educational as well as live analysis as well. So do keep a lookout and eye out for those webinars this week too. All right, thank you everyone. Good luck trading this week, and yeah, I'm sure you guys can have will do well. All right, take care. Thanks, Joel. Thanks, Paul, Rhino, Fabio, Watson, Solomon, Jamilu, David. All right, thank you everyone. Great tuning in, and yep, best of luck for this week's trading as well. All right, thank you everyone, and see you soon.